Dr. Reddy's Q4 numbers are going to be out very soon, and my colleague Pankaj, who tracks the space closely, is now with us. What can we expect from the Q4 numbers, Pankaj?
Dr. Reddy's will be declaring its numbers, and 4,287 crores is what essentially the street is anticipating in terms of sales numbers, which is a good 12% growth on a YOY basis. At the same time, when you look at the PAT numbers, is expected at 506 to 510 odd crores. Now, don't go by the number of the verses here for the PAT. There were a lot of one-offs. It's a company where numbers are slightly volatile in the last few quarters. EBITDA will be a better number to look at, and EBITDA margins will be even better. So 21.1% is broadly what the street is anticipating. Last year, same time, it was 16.7%, and again that was an aberration sort of a number. It has a history of making margins over 20%, and that's something which the street is factoring in. US sales on a QOQ basis expected to grow by 6%. US sales will continue its upward movement. This will be led by new launches. Intropol XL, they have gained some market share that will help. HCQ is one drug which was in news in this particular quarter, and Dr. Reddy's is one of the preferred supplier in the US market, so definitely that should have an impact on the overall space as well. Russia is about 14% of the sales, and there you had a currency impact coming in. However, currency impact, majority of it would come in Q1, but a little bit of currency impact would definitely come even in Q4. What does the management say about India business? What do they say about the US business? More importantly, about how are they managing emerging market currencies is something which the street will focus on.
Thanks, Pankaj, for that. Let's also understand how the numbers might look like for Bajaj Auto as well. And given the massive slowdown in Motown, Bajaj Auto is going to be no different. Yes, it might be a tad better than its peers, but we are expecting weakness across all counts. Revenue is seen lower by close to 12.5%, given that their volumes also slipped by 17% overall basis. Profits seen at 1,000 crores. We're expecting the margins definitely to expand on back of favorable currency movement and also improving commodity costs. So margins are likely to come in at 16.2% versus 15.7%. But yes, on a sequential basis, definitely a dip on the margins as well, because they've not been able to unlikely rather to realize the benefits of price hike on back of BS6 transition. So we're expecting the adverse mix as well to be diluted because of a favorable rupee basis as well. For margin headwinds, we're expecting, of course, lower volumes, lack of profit margins because of BS6 price hikes. But what's likely to cap it is higher realization on their exports, which is a significant chunk of their business, and it's likely to benefit because of favorable currency move. The update on demand and the commentary for the coming for the new year is something to watch out for as well. We want to know what the utilization levels look like right now, how they are going to pan out over the next couple of months and quarters as well. Outlook on exports, particularly in the African continent, and the recent fall in oil prices, how that impacts their demand in key countries, key markets like Nigeria, for example. So these are some points that we will be watching out for as far as Bajaj Auto's numbers are concerned. But that's not all. We also have a couple of other names to keep our eyes out for. UltraTech is one of them, an earnings candidate for today. Vivek is here to tell us what to expect. Vivek?
Well, the largest cement maker in the country, UltraTech Cement, will declare its results. And remember, when you're talking about the cement universe, most of the cement players have actually managed to beat very modest street expectations. UltraTech Cement, however, has many moving parts, and also it is present across a whole host of cities and states across the country. So it is a company with a pan-India presence. Now, if you're talking about the revenues, seen down almost 10% on a year-on-year basis. EBITDA is seen down 12%. Margins are seen again muted, but remember, margin trajectory cannot be completely guessed given the fact that when you're talking about ACC and Ambuja, margins were much above expectation on the back of lower input costs, and also a few operational efficiencies could be attributed to them. Profitability is seen down almost 20%. So what is it that is expected to drag EBITDA? Number one, low volume growth. Realization trends is something that you need to watch out for. The start of Jan and Feb, you saw a complete increase in prices. However, March was a complete washout in terms of construction activity, and therefore no volume offtake was seen over then. Factors to watch: commentary, number one, the main thing that you need to keep an eye out for is demand pickup, housing pickup, infrastructure, any kind of push that the government has given, and what is it that the company is seeing. A lot of pricing trends have witnessed, a lot of accusations to have been made against cement players. So, UltraTech being the largest player would need to, would actually come out with its detailed presentation, and all of these details is something that the analyst community would be very eagerly waiting for. So numbers as well as the commentary is something that the street is eagerly anticipating as far as UltraTech is concerned.
All right, keeping it with previews, Vinny is now joining in with what to expect from Jubilant's Q4 numbers, which should be out shortly. Let's listen in.
Jubilant Foodwork is to post its Q4 FY20 numbers. What are we expecting in terms of numbers? The revenue will stand at 860 crores and see a marginal decline of 1%, while the profits were expecting a sharper decline of 30% and will stand at 52 crores. Margins are expected to be flattish at around 17.6% for the company on a year-on-year basis. Now, the SSSG, which is an important number over here, that is expected to see a decline for Domino's, and that is a 5% decline is what we're expecting this time. So a very sharp decline what we're expecting in SSSG growth. Now, obviously, the QSR segment is mainly hurt due to the restaurants being shut due to lockdown. Now, the dining share for Jubilant Foodwork is 40%, so that is mainly suffering due to the lockdown which we saw from the month of March, while the delivery share, which is 60%, is standing tall, and it's holding on even during lockdown. So that is a saving grace for Domino's and Jubilant Foodwork as well. So that is why we are expecting only a slight decline in revenue of 1%. While raw material inflation is something that is going to keep the margins flat, and that's why a 17% flattish margin what we're expecting. Now, factors to watch out for: one, the commentary, which is going to be very important overall as a QSR industry. It shows us what is going to happen there. While the demand outlook amid the lockdown, how they're seeing, what is the consumer trend for QSR segment, and is the company looking at any promotion launches, how are they going to attract customers, is something we'll watch out for.
Thanks, Vinny, for getting us that update. Let's shift gears and talk about Bajaj Finance that delivered their numbers last evening. The stock is up about 1% right now, but if you look at their Q4 performance, they reported a fall of 19% in their bottom line, coming in at 948 crores. Managing Director Rajiv Jain says because of COVID-19 pandemic and the consequent lockdown, the company has lost 10 productive days in the fourth quarter. Listen in.
In general, the limited point that I would make, given the tailwinds and the headwinds of COVID-19, we are very confident of navigating the challenges posed by COVID. Let's just go through very quickly as to what we are up to and what gives us that confidence. Panel 6. Clearly, this will give you texture on what has happened in the last, we are virtually on 19, which is 50 days into the quarter, and 60 days into COVID. Clearly, we've taken a cautious stance on and have tightened underwriting standards and LTV norms across businesses. We had no business in our B2B business in April given lockdown. From late April and early May onwards, green and orange locations have started to resume business. We are currently open. We have 2,134 locations that we are present in. We are 1,600 locations that are actually open, 1,583 to actually be precise. We are now originating between 22 to 25,000 applications in these 1,583 locations on a given day. No lending in auto finance, similar to B2B. B2C, which is our personal loan cross-sell or our unsecured businesses, which we gave you to not lend. In April and in May, we will gradually reopen first in green and orange from June onwards and pick it up from there. Similar for SME businesses. B2B rural has also resumed operations. We do believe that rural will be the fastest to recover. One of the businesses that we've been building, which we've not talked too much about, is gold loan business. We do expect to see increased demand in this business, and we've organized ourselves in the last 60 days to